Monday, July 16th, 2017, Monaco 64, home of alternative economics and contrarian views. So today I'm going to be looking at the technical picture, short-term and longer-term technical picture for the dollar, dollar index, the Japanese yen, gold, silver, and the HUY index. Before I start with the charts, though, just review the fundamental picture for the currencies and precious metals. I still think the monetary policy we've seen in the last almost 10 years is a reckless one by the major central banks of the world, especially the reserve, the central bank that runs the reserve currency, the Federal Reserve and the US dollar, and the club, BIS club, if you want to call it, BOE, Bank of England, ECB, Bank of Japan. They followed along, and this is a monetary policy that's unprecedented for the reserve currency of the world. It has happened before, but mostly in third world countries and Weimar Germany. It's an isolated incident, but it's one of the fundamental reasons why I still think it's holding on to precious metals and also commodities in general is the way forward. I know it has been frustrating since 2011, but nothing's changed. The numbers, the economic numbers we saw on Friday, even though they're just for 1 month, they continue to show that the US economy is not doing as well as people expect. CPI, core CPI was 0.1, was expected 0.2. Retail sales for June, the core number was down 0.2, was expected up 0.2. The year-on-year CPI came out at 1.6, was expected 1.7, and it dropped from 1.9 the previous year. I know these numbers don't really reflect the real rise in prices, in my opinion, in the opinion of many, but that's what the Fed follows, and they want to see that number closer to 2%. So headline retail sales as well, down 0.2, expected up 0.1, and even capacity utilization came in weaker than expected. It was only industrial production that came a little stronger, but that's why the dollar continued to go lower on Friday, and precious metals rebounded. So let's have a look at the dollar index first. This is a chart from 2011, basically when gold topped there and the dollar index bottomed at around 72.60. We've gone to a high late last year, 103.82. Late 2016, early 2017, and since then the dollar has been on a one-way street. You can see we closed fairly weak on Friday at 95.11. In terms of I've done a retracement there of this move, and the key level, the first key level, is 91.92, which is the 38.2 retracement. And it's interesting when you see this next chart, because this retracement of 91.92, I'll show you why that's interesting. A shorter term chart of the dollar index, you can see the low from May 2016 was 91.91. So that 38.2 of the longer term chart is actually, that level there of 91.91. This is a shorter term chart, of course. It's from a little later. It's from a little later than that bottom at 72.60. It was a bottom at 79, just before the BOJ, Bank of Japan, started announcing their Abenomics. That's when the dollar started really rallying there from the low of 79.06 and the dollar index. And you can see that also the 50% retracement of this latest move up in the dollar is at 91.45, which is close to that 91.91. But yeah, last week, very bearish close for the dollar index. So it looks like we've got some support at 94, but it looks, that 91 level, or basically 92, that could be the next big test. And we could see the dollar index maybe hold there for a while and trade between 91.50 and 94.37. A lot of times markets trade between the 50% and the 38% retracement, or also between the 50% and the 61.8%. But the dollar definitely looks like it's coming down. Last year we broke through that 100 level, but it looks like it was kind of a false breakout in the scheme of things. We're nowhere close to 100 anymore, and it looks like we're gonna go test the lows of the last 2.5, 3 years very soon. So now we're gonna look at the Japanese yen, because the Japanese yen seems to be strongly correlated now, since 2013, with gold. And I'm taking, though, the Japanese yen from 2011. Basically, that's when the dollar bottomed against the yen there at 75.58. As you can see, we went all the way to almost 126 in 2015. And we've been going down since then. I know we had a rally late last year from around 100 to just around 118, but now we're going back down. Lately, the dollar strengthened a little bit, but as you can see, we're touching that retracement line there, 23.6%, which happens to be right around that 114 level. We've gone above it a few times in the last few months, but not enough to, for the dollar to rally back up towards the 120 level. As you can see, the really key level on the downside is around 100. Last year we tested that a few times. We even went below it, but the 50% retracement, of this move, as you can see, is just above 100 at 100.693. And last week, the yen got up to 114.50, but it closed, as you can see, well, the dollar got up to 114.50 yen, but it closed at 112.52, so well off the highs. And that's what helped gold and silver towards the end of the week. So now let's have a look at the long-term picture for gold. And this is a chart going back from, the low in 2000 at around 255 to the high in 2011 at 1920. And the interesting thing you can see there is we retraced 50% of that move in 2015 when we touched 1045 in gold. I know it's 1087, but in the scheme of things, it's really close there. It held the 50% level. And as you can see now, lately we've been trying to get back above 1300, but there's a 38.2 retracement there, which is really quite important in terms of, it's like the golden mean, or 61.8. It's the reciprocal. I know it's 1283, but we got up to 1295, so it just goes to show that we need to get back above 1300, and then we can maybe make a move higher. And as you can see, basically since I'd say 2013, the middle of 2013, gold till now, gold has basically been trading between that 50% retracement and that 38.2 retracement. For those of you who say technical analysis doesn't work, it's manipulated. I do think gold is manipulated, but it does, charts do stick to their technical levels. Not saying that gold shouldn't be higher, but it seems to be stuck here between this 50 and 38.2% retracement. That's the long-term chart of gold. Let's have a look at a shorter term. And I'm doing a retracement analysis from the low in 2015 at 1045.46 to the high last year in July of 1375. And it's interesting to note that we're holding that 50% retracement right here, which is around 1211. Earlier in May this year, we held there around 1214. And now as well, we went through to 1205, but we managed to close the week at 1228. And yeah, so we need to get back above 1300, as you can clearly see in gold. Let's have a look at silver. I'm going to look at a really long-term chart first from the low in 2001. If I'm not mistaken, at $4 basically, to the high in 2011 at almost 50 bucks. And there's a really good trend line there, as you can see as well. That trend line held in 2015 at a low of 1357, and it looks like it's holding now. I know we went through that in the flash crash last week, but this chart didn't even registered that flash crash. We finished almost around $16 last week. And the key level above, as you can see, is that 61.8 retracement of the bull market move, which is basically 2150. So that's quite easy to see there. And I'll just quickly show you the short-term chart of silver, but with that really long-term trend line, so you can have an idea how that trend line has held well in 2015, and it looks like it's holding well right now. It's just around 15, really, that line. Now let's look at the HUY, because the HUY had a pretty good week. We closed last week on the 7th of July below 180, and we managed to rebound quite well this week, and we finished at almost 186 at 185.91. And it looks like the HUY is ready to go back up here. It's held that 180, as you can see, is a key support there, 180. So things are looking up as well for the HUY. So that's it for now. Yeah, as I said, fundamentally, the precious metals, in my opinion, and commodities still look good. There has to be a consequence of almost 10 years of unprecedented creation of phony money by the central banks of the world that are supposed to be, the reserve currency of central banks that are supposed to be serious and not Mickey Mouse third world countries, but that's not the case. And now they're basically trying to pretend that they're going to be able to get out of all this, amazing creation of debt out of thin air, or money out of thin air, and artificial asset prices. And I think they're stuck. So they're going to have to keep printing. Eventually, they might raise a few more times and pretend that they're, unwinding their balance sheet. But I think it's going to be nearly impossible. And technically, as you can see, things are looking a little brighter for the precious metals and not as good for the dollar. In the end of the day, I'm not saying that the euro, the pound, or the yen, or other fiat currencies are really the place to be, because the dollar is going to go down. I think they're all going to go down, but they just take turns. At the moment, the dollar is weaker, but in the end of the day, they will all sink against precious metals and real things. So if you enjoyed this video, please give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet. And you can also follow me on steemit.com, STEEMIT.com. I'll talk to you later. Bye.